House prices fell more than expected in July and at the fastest rate in 3 years. I'm joined down the line today by Henry Pryor, UK property expert, to talk me through the latest data releases and what they mean for the housing market. Mr. Pryor, thank you for joining me. First of all, despite the fall in prices, many still see the UK housing market as relatively stable within the country's current economic climate and double-dip recession. You talk to those both buying and selling property in the UK every day. What do these latest figures mean for them?
Well, that isn't actually a universally held view. The IMF in a recent report considers UK house prices to potentially be at least 30% overpriced when looking at a long-term trend. And the UK, like other economies, is actually a mixed picture once you start to drill down and look at house prices in the regions. We are fortunate here to have house prices underpinned by robust performance in London and the southeast of England, but elsewhere house prices have slid considerably in some parts, including in Northern Ireland, for example, where they're down by 30% over the last 12 months.
What areas of the UK are most affected in the fall in house prices and weak mortgage lending? And do you think cash-rich areas of the UK will be able to defy this, or will they also be affected?
Well, across the UK as a whole, house prices present a very mixed picture. We still see considerable appetite from predominantly cash purchasers, or at least people with predominantly cash to invest in property, both in London, certainly in prime central London, and in some of the smarter areas of the southeast. Elsewhere across the country, even towards the higher end, which until now has remained relatively insulated, we're seeing property prices starting to tumble in some parts considerably by as much as 30 or 35% over the last 12-month period, particularly as you start to get further away from London. So in Wales, Northern Ireland, and even in Scotland now, we're starting to see house prices slide back, which is leaving many people either with no equity or starting to drift into negative equity territory.
How will those selling homes afford the drop in price, and what advice can you give them?
Well, some people are going to struggle and are already struggling big time to sell their properties. Most people in the UK are not what one might term sophisticated investors. So those who are traditional homeowners, having bought a property primarily to live in, don't yet understand that actually for the vast majority of people, falling house prices are perhaps more of an inconvenience than a tragedy. There will be some people who, coming out of the top end of the market, are going to find that their house isn't worth what they needed it to be in order to be able to, for example, retire. But obviously cheaper house prices are a bonus for all those trying to get onto the housing ladder at the bottom. And the vast majority of people in the middle who are trading from one property to another, often trading up, will find that whatever hit they're taking on their own house is going to be reflected in the price they pay for the new house they're going to buy. That still leaves some people with considerable issues when it comes to funding, and we calculate that there are about 1 to 1.5 million people who are effectively prisoners in their own home. These are people who, 5 years ago, when the credit crunch struck, were perhaps looking at only a 10% deposit in order to be able to afford a mortgage to buy their property. They've seen house prices, but those particularly further away from London, fall by 10 to 15% since then, and in some parts of the country, as I say, even further. They are finding it now very difficult if they sell to have the 10% that they originally required when they bought their first house, and certainly are unable to provide the 25% deposit, which most UK lenders now require domestic purchasers to find in order to be able to afford a mortgage product that they are currently offering.
You mentioned funding there. The government launched its Funding for Lending scheme earlier this month. Can you explain just a bit about how this works and what it means for the housing market?
Well, this is, and please forgive the cynicism, this is one of those initiatives that makes the UK government, look as though it's doing something rather than nothing, but in reality it's akin to offering a glass of water to an already drowning man. The problem with the scheme, if we summarise it just to start with, the UK government via the Bank of England is offering £80 billion to banks and building societies on the proviso that they effectively lend that money out immediately to businesses, small businesses, and to mortgage borrowers. If they lend the money out, then the government will provide them with subsidised loans, which will make it easier, it is thought, for them to be able to afford to continue to loan money. The problem is that lenders at the moment have spent most of their last 3 years shoring up their balance sheets to improve their reserves in order to qualify for the new revised requirements that the Financial Services Authority in the UK administration now require them to have.
In your opinion, if the UK economic climate does not change, what can we expect from UK house prices for the rest of 2012?
Well, the prognosis, I'm afraid, for the UK housing market is not encouraging when you look across the country as a whole. I perceive house prices across much of the country to continue their downward glide path, which we are already set on. Inevitably, there will be parts of the country that buck the trend, both those at the top and the more optimistic side of the market, like prime central London, where borrowing, which is the major driver of house prices, is less relevant, and cash purchases will continue to drive prices upwards. Conversely, at the other end of the spectrum, until such time as lending criteria is relaxed and lenders are able to get out there and lend money on more attractive and more affordable terms, house buyers will be unable to fulfill their housing aspirations, and as a result, house prices will drift sharply lower in some places.
Thank you, Mr. Pryor, for joining me and giving me those interesting insights into the housing market. That's all from me, but stay tuned to Dukes Copy TV for market predictions and interviews. Take care.